There we have Ayodele Ebo, MD, CBO, Optimus by AfriInvest joining us right here. Great to have you on the program.
Good morning, Ladi. Thanks for having me.
Yeah, so as we approach the end of the first half of 2022, can we have your thoughts on, major highlights in the financial market, both globally and in the domestic space?
Okay, thanks. We've had a series of very strong activities. So if we look at it even from the global space, the Russia-Ukraine war was caused a lot of disequilibrium in the economy, both globally, though we didn't feel much impact locally in terms of our financial markets. So you would see that led to a significant rise in energy prices, which is hitting hard on across economies. You would see even the price of fuel in the United States rose to as high as over $5 per gallon, which is very significant compared to what it was this time last year. We've also been seeing the series of rate hikes from the Bank of England as well as the US Fed. We saw the major increase this week, about 75 basis points, and also Bank of England following yesterday with about 50 basis points. They started in December. So you would see that has caused a lot of sell-offs within the equities market. The market dipped significantly. Even the S&P dipped by about 3% also yesterday. So there's been a lot of uncertainty going around within the global space, which is also with the hike we are seeing within the developed economy, which we feel that also the ECB is also, that's the European Central Bank, would also follow suit. It's making emerging and frontier market instruments unattractive because of the attractive or better interest rates they'll be getting in their country. That's also impacted on the crypto market because of the reduction in amount of money in circulation as a result of the rate hike and the winding down of the quantitative easing. And now coming home, you would also observe that, yes, when you look at our market, it's been a bit dissociated from the global space, but we saw our monetary policy committee increase our rate by about 1.5%, which is very significant, so 13%. Though we're expecting that we'll see that major rise in interest rate, but we are yet to see that corresponding reaction in the fixed income market. So by and large, we believe that, yes, several activities that are more negative than positive occurred within the global space as well as the financial market so far in the first half of the year that is wrapping up. And a lot of investors have a lot of stories to tell based on
quite a number of stories, because if you were able to maybe sell off, maybe in January, the beginning of this year, you'd be, smiling, at this moment. But a lot of investors have held all the way from the highs to now, and looking at the crypto market, the global equities market, all of them have had incredible drops, up to this moment. Some investors are still holding. Do you think now is a good time to start scaling out, or is it better to just hold on and maybe hope for some turnaround at some point?
Okay, thanks. And very valid comments there. So what I would propose, if you have not exited the market, because I also know a lot of traders that shorted the market, they sold off with the plan of buying back. So, but if you are still in the market, if you were comfortable to go in when prices were high, then you shouldn't be bothered coming in at these low prices. So what you see, this is always a cycle. You would see that stocks that have very strong fundamentals, they present opportunities when there are volatilities. when they are challenging period. Yes, it's been projected that the U.S. economy will go into recession, but it's an economy cycle. So from the recession, there will also be that growth and leads to boom. So if you have that long-term horizon that that you can wait for the next 2 years, this is the time to begin to come in tranches. So I won't say buy use all your proceeds now, but if you are able to average out throughout this period around, for those that plays the stocks, if you also want to play with invest in exchange rated fund, or for those that also invest in crypto, this is the time to buy an average. You stagger your money and buy within the next 1 year. So when market would improve, because definitely what you always see, if you check the trend in the last 50 years, the market will rebound and exit its all-time high once the dust settles.
Well, sounds like a plan there, dollar cost averaging. But now, being specific to the fixed income market in Nigeria, how has that market fared so far this year?
Okay, thanks. The fixed income market, Nigeria, which is currently dominated by domestic investors, and that's when the Russia-Ukraine crisis started, we didn't see significant sell-off as other economies experienced. And we also want to note that in terms of activities, it's also very limited. Our market currently, when you look at the fixed income market this year, the activity has been really very slow. And as a result, you see that price discovery would always be very challenging when there are no when the activity is not as it should be. So what we've just been seeing is just pockets of transaction. Yes, some may be narrow volume. So as a result of that, that inefficiencies we're not seeing that impact on yields within the fixed income market, and that's why you can when you look at the MPR that was increased by 1.5%, you would expect that should also filter into even the bonds market. When we saw that initial reaction in the treasury bills market, but we've seen that is already the trend is reversing. And a lot of investors, despite that we all know that government needs to borrow significantly because the budget deficit is significant, it's being projected that it may get as high as 10 trillion. But currently, it's that market, because of also the limited options around, you see the institutional investors, they still have to invest even at this low rate, both fund managers and the PFAs. So that is limiting that rise in interest rate that you see. But overall, we believe that rates has not moved as expected.
Quite interesting. The Nigerian stock market, has been one of the best performers, so far this year, even though we've seen volatility with a global market. Do you see this this trend switching anytime soon?
Okay, thanks. And the first thing that we need to note is that our market is now detaching itself from the global space, because domestic investors in the last 2 or 3 years control between 70 to 80% of activities. So as a result, when there are crises in other economies that will still significant sell-off by foreign portfolio investors in selling off, that has reduced the volatility we are seeing. However, if you do a further dive in analyzing the Nigerian Stock Exchange all share index, if you look at the top 4 companies, Airtel Africa, MTN, Dangote Cement, and I think maybe the Nigerian Breweries, you would discover they account for about, I think, Boa Cement rather, about 40%. So when you take this out, you see that our market is not performing as it should. So when you look at the oil and gas index, because of CEPLAT, the market it's rallied by about 58% year to date. You also want to look at the when you look at the banking index that accounts for over 50% of activities, that is still in the red. So by and large, the performance we are seeing in the market is skewed towards some few stocks that account for less than 20 or 30% of total activities in the market. So, but what investors that would always just recommend is that go for stocks that have been able to weather the storm, stocks that when you look at their dividend yield, at least minimum 7% over time, and they'll be consistent about it, you will still be able to at least get a bit of cash flow, pending when we believe that we begin to see that upside. Because the political risk is also a major factor to consider now. But, for most of the domestic investors, because they already understand the terrain, they know that by God's grace, the election would come and go and activities will still move. So they are not as bothered as the foreign investors that would have exited when before election.
Right. Anyway, it's been a tough first half, for 2022. Let me have an outlook for the second half. What can we expect? Maybe a turnaround?
Okay, thanks. And starting with the fixed income market, we still feel that the market interest rate would rise. Looking at what the borrowings that we expect government to also make, with the crisis we're also seeing abroad, the foreign borrowings may not be possible this year again. So it means that would also be packed and the government will have to borrow domestically. Beyond that, you also note that as we approach election, there's also the risk element also increase. So we believe that interest rates on fixed income will still improve. We'll continue to see more commercial papers with good rating, taking advantage of this low interest rate. And for the equities market, we may continue to see sell-offs in most of the companies, because a lot of as interest rates within the fixed income increase, the stock market becomes less attractive. As the Nigerian stock market becomes less attractive, and as a result, prices will go down. But by and large, there's still the downside risk. Inflation is a major factor. We're also expecting that as we approach the election, the risks will also amplify. But by and large, I would say that for the equities market, investors should be cautious. Don't be very bullish on the market now. It's good to have a direction of where the economy is going. And if you have to have that long-time horizon, so that you're able to average out of the market.
All right, Mr. Ebo, we'll keep watching, and hopefully we'll have some kind of soft landing so the markets can actually breathe for the second half. Thank you so much, Mr. Ayodije Ebo, MD, CBO Optimus by AfriInvest. It was great having you on the program.
Always my pleasure. Thank you for having me.
Right.